Well, I want to say what you did was really, really smart, because the best time to start a business is right after a crash. I made more money after 2008 than I ever in my whole entire life, because everybody was hiding like little cockroaches.
Wow, you made more money after 2008 than
Yeah.
your entire life.
Yeah, so when, here I'm talking about the coming depression, everybody says, oh, you're such a pessimist, I go, no, I'm excited.
I wish this video could help your life a little bit more beautiful. Let's go.
Time of the year now, you got people.
In 10 or 20 or 30 years, I think stocks will be a lot higher than they are now.
I know you look at things like that, but I also know that you look at stocks and try to decide if they're fairly valued, if they're overvalued, if they're looking cheap at this point. And we have been waiting for a correction for an awfully long time. That's finally come. Do stocks look cheaper to you, just based on where we've come?
Well, anytime stocks go down, as far as I'm concerned, I like it because I'm a net buyer of stocks. I've been buying stocks ever since I was 11 years old. So when stocks go down, it's good news. Just like when hamburgers go down, it's good news, or Coca-Cola goes down, it's good news in terms of anything I buy. But stocks are going to go down. You could probably look it up as to what percent of the days, since I was born, they've gone down, and maybe it'd be 30% or something like that. And you can't predict what stocks will do, but in the short run. But you can predict that American business will do well over time. And just take the 20th century. Stocks went from 66, the Dow average, 66 to 11,497, and you were getting 3 times as much in dividends as the whole average was selling for at the start. And you had 2 world wars, and you had a Great Depression, flu epidemics, all kinds of things. American business will do fine over time, and if you own a piece of it, and if you don't beat yourself, the only person that can cause you to get a bad result in stocks is yourself.
Yeah, unfortunately, that's the biggest problem, is trying to fight yourself in some of these situations.
Yeah.
Have you been buying more stocks lately just because prices have come down? Have you upped your percentages and other things just
We're
because?
almost always a buyer of stocks. So we have bought more stocks since the end of the year. But we earned 17 and a fraction billion last year, and we had our float go up 4 billion, which is additional money available. And so we're almost always a buyer of stocks, and we're a more aggressive buyer when they're going down. I mean, I feel much better when they're going down, but it's hard to think of very many months when we haven't been a net buyer of stocks.
I can understand it. When there was recessions, I didn't have to worry about what was happening. I could go there and people were still there. And you laugh, I made 10 or 15 times my money in Dunkin' Donuts. Those are the kind of stocks I can understand. If you don't understand it, it doesn't work. I'm trying to convince people there is a method. There are reasons for stocks that go up. Coca-Cola is earning 30 times per share what they did 32 years ago. The stock has gone up 30-fold. Bethlehem Steel is earning less than they did 30 years ago. The stock is half its price of 30 years ago. Stocks are not lottery tickets. There's a company behind every stock. If a company does well, the stock does well. It's not that complicated. People get too carried away. And first of all, they try and predict the stock market. That is a total waste of time. No one can predict the stock market. They try to predict interest rates. I mean, if anybody would predict interest rates right 3 times in a row, they'd be a billionaire. Considering there's not that many billionaires on the planet, it's very, I had logic, so I had a syllogism and studied these when I was at Boston College. There can't be that many people who can predict interest rates because there'd be lots of billionaires. And no one can predict the economy. I had a lot of people in this room were around in 1981 and 82 when we had a 20% prime rate with double-digit inflation, double-digit unemployment. I don't remember anybody telling me in 1981 about it. I didn't read, I studied all this stuff. I don't remember anybody telling me we're going to have the worst recession since the Depression. So what I'm trying to tell you, it'd be very useful to know what the stock market's going to do. It'd be terrific to know that the Dow Jones average a year from now would be X, that we're going to have a full-scale recession, where interest rate's going to be 12%. That's useful stuff. You never know it, though. You just don't get to learn it. So I've always said, if you spend 14 minutes a year on economics, you've wasted 12 minutes. And I really believe that. But you should study history And history is the important thing you learn from. What you learn from history is the market goes down. It goes down a lot. The math is simple. There's been 93 years a century. This is easy to do. The market's had 50 declines of 10% or more. So 50 declines in 93 years. About once every 2 years, the market falls 10%. We call that a correction. That means, that's a euphemism for losing a lot of money rapidly. But we call it a correction. And so 50 declines in 93 years, about once every 2 years, the market falls 10%. Of those 50 declines, 15 have been 25% or more. That's known as a bear market. We've had 15 declines in 93 years. So every 6 years, the market's going to have a 25% decline. That's all you need to know. You need to know the market's going to go down sometime. If you're not ready for that, you shouldn't own stocks. And it's good when it happens. If you like a stock at 14 and it goes to 6, that's great. You understand the company, you look at the balance sheet, and they're doing fine, and you're hoping to get to 22 with it. 14 to 22 is terrific. 6 to 22 is exceptional. So you take advantage of these declines. They're going to happen. No one knows when they're going to happen. There's always something to worry about. If you own stocks, there's always something to worry about. You can't get away from it. All you have to know is you're going to see, it's always going to be scary. There's going to be always something to worry about. And you just have to forget all about it. Cut it all out and own good companies or own turnarounds. Study them and you'll do well. This is important whether you're investing for a 4-year-old, a 14-year-old, or a 74-year-old. You have to say, what am I going to do when the market goes down? Because I've had audiences like this, larger audiences, and I'll say, how many people in the room are short-term investors? I've never had anybody ever raise their hand. I mean, everybody in the world is a long-term investor until the market goes down.
So you're working for a big company like Google, you might be safe today, but you might be gone tomorrow. Whereas your little startup, you might have a better chance. I'm not saying what it is, but there's something everybody can do. Like I said, everybody can buy a $20 silver piece. Everybody can afford 20 bucks. But will they do it? No. They'll be at Starbucks sucking it down instead.
So what would the 30 to 35-year-old Robert Kiyosaki do right now? What industry would you be looking at today to make your money?
I'd be in this business.
You would still be in this business. Education.
Look at this.
Content.
Look at what we're doing.
Wow.
Look at what we're doing. You know, I mean, I have several YouTube channels going out. I don't know what I'm doing, but I have young people doing it for me. So I'd be with technology. Now the cameras will be obsolete, but you can buy a new camera. Do you know what I mean? I wouldn't invest in the camera. I'd buy a camera, but I wouldn't invest in the company. You know what I mean? It's how you think about this right now. So just know that those who are in big companies who think they're safe might be at the most at risk. You know, if you're working for Bank of America or Wells Fargo, you might be at risk.
Sure.
It's been a few years now, and this cold town is not quite the same.